Hello everyone. This is Wayne Klump from eTradingEdge.com. I wanted to go over a changing pattern that we've been seeing in the markets here recently and just kind of bring light to it, kind of talk about what's going on, and then see if it's going to be something that sticks around. Also, I'd love to hear what you guys think about this. So if you want to drop a comment below, I'd love to have a discussion about what might be causing this and what is changing in the markets. So what is this that I'm alluding to? It is the relationship of the VIX to the S&P 500. So back here in the candles, we have the S&P 500 or the SPX. That is the candles back here. And then this purple line is the VIX or the volatility index. And then down here in the very bottom, we have, it says CC VIX. That's the correlation coefficient. This is the volatility's relationship to the underlying asset, in this case, the SPX. Now, when we have a typical normal market, and I say typical, if I zoom out here, you can see the vast majority of the time, here's 0 on our correlation coefficient, the vast majority of the time, we have negative correlation. What does that mean? That means that as the market goes up, volatility comes down. As the market goes down, volatility goes up. Now, what is going on in these little volatility spikes? Well, in order to understand what is going on, let's talk about the normal traditional moves. All right, so our normal traditional moves, we'll just go back to 2019. All right, our typical move here in the market is that as the market rises, we have a depressing volatility, and that gives us a negative correlation, right? Most of the time it stays under 0. And then when we have the market coming down, we end up having a volatility spike and more indecision, volatility. Market goes up and down a lot more. In general, this kind of sticks around. Market goes up, volatility comes down, right? Then over even a smaller time frame, you can see even like a single day. So there's a very itty bitty small red day, and we get a little bit of a spike in volatility. This is very normal, very normal market behavior. Now, why is that? Market goes up, there's lots of different reasons, but as market goes up, typically it means that you can invest more, which creates more pushing up because there's more investing in it, and it means that typically there's less risk to the downside because you're growing and there's less selling going on, and selling creates more volatility. So lots of different reasons. We won't get too much into that today. Anyways, also what happens here is we have volatility spikes. Now, before we get into these last 4 spikes, we're going to come back to these. Here's our last 4 spikes here. And then this recent one that's going on basically today. We'll talk about that much more in detail. But let's go to a typical volatility spike. So a typical volatility spike happens to the upside, actually. And so we will, we'll look at this volatility spike just as a recent one. I'm just pointing them all out. But if you go look at any volatility inversion spike, you'll find that this is a very common pattern. Market is going up, we're expanding to the upside. The volatility spike is going up, volatility is going up. It means we're going into some sort of a leverage bubble. Sometimes those end in snaps, sometimes they end in fizzles. I talk about more about that in another video. But in general, that's how these volatility inversion spikes end up showing up. All right, let's look at another one that goes back, let's go back to 2017, sure. Here is a big volatility spike. This is probably the most famous one. Big expansion to the upside, volatility going up, creates this volatility spike, and then eventually it ends in a snap. All right, let's go look at something that maybe is slightly more just elusive. Here's a volatility inversion spike. Market is going up. Volatility is creeping up. That's why it's getting a volatility spike, right? It's getting a volatility inversion spike. That's typically how these volatility spikes go. I can go on and on again. Market going up right here. Volatility going up. Spike going up. So typically these volatility spikes go to the upside. I mean, seriously, it's very, very hard to find one the opposite, but that is exactly what we're getting here recently. So let me get back over to that, and you can see here, all right, what is the market doing right now in this spike, right? So here we got this spike, market is coming down, volatility is coming down. What? That is something that we have not seen. Okay, maybe it's just a one-off. Okay, here's another volatility spike where we go positive. Okay, market coming down. Volatility in the background, as you can see in the purple, coming down. What the heck? Here we go again. Volatility spike, market coming down, market coming, or volatility coming down. Market going down. Volatility coming down. Okay, whoa. 3 times in a row, these volatility inversion spikes are happening to the downside. Unlike anything we've ever seen over the last 20 years. Maybe even further. It's hard pressed to find another time like this. All right, now, okay, here we go. Market looks like it's expanding to the upside. We're getting a leverage up bubble. We've got a spike to the upside. Okay. Things are back to normal. We're used to these volatility inversions to the upside. That can happen. Sure, we know how to play these. We know how to trade through them. We talk about this in the Adapt Advanced program. Everything's fine. But then we get a market coming down and the volatility coming down. What? Yeah. Something really, really odd is happening in the backgrounds here. And this is a change in pattern. The last 4 spikes have been like this. So do we depend on that going forward now? Is that what we're going to have more so of, or is more of these volatility inversions to the downside? Do we start trading and planning for that, even though it's a pattern that has never existed before over the last 30 years? What's changed? What's going on? These are the questions that definitely keep me up at night to look and see what is going on, see what we can predict in the future, and see if it's a pattern that we can quantify and take advantage of. Anyways, I wanted to bring this up to you guys and show you just how rare and odd these times have been basically over since November over here, that these volatility inversions have been acting very odd. The bottoms in the market have been very strange. And even the tops of the markets have been just a little bit odd recently. All right, guys, until next time, I'll talk to you later.